Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well on this fine Friday, weekend, or weekday, whenever you're watching. But if you're new here, every single Friday I break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. And in today's episode, we have a massive Cardano announcement, some Ethereum updates, a nice sprinkling of Bitcoin news, and of course, our usual 404 Logic Not Found segment. But before we get into all of that, let's kick it off with questions from the community from YouTube and Twitter. So I'll head over to the good old iPad here and get started with those. If you want to get one of your questions answered though, leave them in the comments down below or tweet me at Hashoshi4. And if you would be so inclined, please do subscribe to the channel and hit that little bell notification button so you can get a heads up whenever I post new content on the channel. And let's get done with these questions. All right, first question on the books today is from Joe Coletti. It says, thanks for the recommendation. I want to try this. I think this is talking about Brave. It said, you cautioned against importing passwords that were saved. Why? I finally belatedly bought into using unique passwords for each site, doesn't want to pay Dashlane for the passwords, and instead he wants to leave Chrome but not have to re-input a bunch of passwords. So basically the question is, why do I caution against importing saved passwords from Chrome into Brave? Ultimately, it's because I'm paranoid. I believe that there are those instances where things go wrong in that process or breadcrumbs get left behind and passwords are very sensitive. So I tend to just recommend everyone uses a password manager. I use Dashlane these days, but I've also used Keeper in the past and I love them. They're both amazing password managers. But in this case, if you want to move things to Brave, that's totally fine, but just be warned, whenever you have passwords stored in a browser, no matter how good that browser is, it is always a risk. So make sure that you just understand the risk that comes with doing that. So ultimately, migrating them safely, use the import tool on Brave, but in my opinion, I have to caution you against it. Use a password manager. It's worth every single penny. All right, this next question, I'm not even going to attempt the name. I'm very sorry. These are Russian characters that I don't understand. Why no basic attention token? Do you still like it? This is, I think, in reference to my altcoin video where I had a bunch of altcoins that I was listing and basic attention token was not in that list. Here's why. I believe in Brave browser. I believe in the basic attention token ecosystem. I think what they're doing is amazing. But in my opinion, the basic attention token itself is not designed to accrue in value because the supply is huge. There's not a lot of work done on making the economics of basic attention token push the value up higher. It's really just used as a means by which you can make payments. And most people are probably going to convert it out to Bitcoin or to Ethereum or to other long-term investments after they earn it for BAT rewards, for tipping or for ads, etc. So I don't think basic attention token is an intended purpose as an asset to invest in long term. People always associate a token with the product and think that buying the token is investing in the product, and that's not always the case. Tokens are not always designed to accrue in value, so just keep that in mind. Basic attention token is an amazing invention that I think is important to Brave browser, but I don't think the token itself is something that I would hold as an investment per se. Thank you for the question. I love Brave, love BAT. It's just not something I think is a real investment per se. Thank you. To hell with Ibipitanga. I think I nailed that name. Next question is from that. Let's see. People on the web claim against Opera because the software is now proprietary of an enterprise from China. After Huawei and Xiaomi being accused of spying data and the recent Hong Kong situation, I wonder if Opera is really safe. What do you think about it? So I made a video a while back about Opera, Vivaldi, and Brave being great alternatives to the Google Chrome browser. I myself have switched to Brave and I don't use Chrome anymore. That being said, at the time, Opera still had a fair number of open source components. I think the Chinese acquisition was relatively new, so I didn't really know a lot about it and I hadn't seen any indication personally that it was a risk. Just being a Chinese company does not mean something is risky. So that's the first thing I want to lay out there. Just because a product is acquired by a Chinese company does not mean it's inherently now spyware. So I want people to understand that. However, the increasing amount of software based from Opera that is becoming closed source and becoming this opaque black box that I can't see. And I don't use Opera anymore on any of my browsing opportunities out there on my work computer, on my computer, etc. I'm now back to Firefox as my number 2 to Brave. And this is really because I don't know for a fact that nothing is going on behind the scenes. And now that I can't see anything behind the scenes, I just don't trust them enough to say, yep, I'm going to keep using Opera anyway. So if you're comfortable with those trade-offs, understanding that there might be spying going on, we don't have any proof for it, we don't have any proof necessarily against it, that's kind of your decision. But to me, I don't really trust Opera enough to keep it, and there are better alternatives out there in light of all of that. So that's my thoughts on Opera. Definitely let me know in the comments what you think. Thank you for your question. Next one is from Alo Ariza Madrigal. Man, great content. Like every other video I've seen on your channel. Thanks so much. I really appreciate that. So he says he's a developer in finance. I'm fascinated by blockchain and crypto and also a musician at heart. Do you know if there are any blockchain projects dedicated to music or to the music industry? The answer is yes, there are. Off the top of my head here, off the cuff, I don't know if I can name you names of specific projects, but I can of course add that into the video sort of on the screen here and sprinkle those in. I answer these things as they come. I basically just scroll through and find questions, so bear that in mind. But I do know that Imogen Heap, an artist, she was working on a product that was basically to facilitate the payment for music licensing and stream-by-stream payments, etc., for music, for artists onto blockchain using cryptocurrency-based payments. I don't know how far along this got or if it's still actively developed, but I do know the idea was that cryptocurrency could be a great way to start to make the playing field a little more level for the smaller artists and even some of the bigger ones that don't get paid nearly enough for their art, and they get screwed by the streaming services out there. So I think blockchain and cryptocurrency itself has a great deal of applicability to both the payment side and licensing side of music, but also to the copyright protection and ownership licensing side of music as well. So I think we will see blockchain and crypto moving in that direction. Thank you very much for your question. And I think those are all the questions we have today because we have a fair bit of stuff to talk about in terms of the news. So thanks so much for your questions. Again, if you want one of your questions answered in the next episode or one in the future, leave them in the comments below. So let's kick things off right with some Cardano action because I'm super stoked about this news from Charles Hoskinson himself, one of the main leaders behind Cardano. The long-awaited staking and incentive features intended to bring the network to decentralized proof of stake is about to become a reality, with Hoskinson shouting out some of the dates on which we can expect the Shelley mainnet release to come. As early as next week on the 9th of June 2020, the closed testnet running the full Shelley codebase will be opened up to the public to test and use. From there, testing will continue as the stake pools and public staking network run live, and if all goes well, end-to-end throughout this process in the public testing, then it's time for mainnet towards the end of June. So if things go awry though, or bugs are found and things need to be worked on from a stability perspective, this mainnet launch may run into July or a little bit later. But that's the extent of potential delays that Hoskinson mentioned at least. Now, there's a lot to unpack here because of course one of the major criticisms laying toward Cardano over the year, or maybe even 2 years past, has been their inability to meet deadlines that they've talked about. Now, I've long defended them on this front because I think that the complexity of what they're building is severely, severely underestimated. And I also think that the first deployment to mainnet needs to work well. It actually needs to work perfectly. It can't fall short. So I think they needed to take their time. That said, I think that this right now is the real deal. I think that by the end of the July period, we're going to have a fully functioning proof of stake network on the Cardano mainnet. And shortly thereafter, I think we'll see Goldman bringing smart contracts to the Cardano world because it's being worked on in parallel. Now, if they can get both proof of stake and smart contracts running in mainnet by the end of 2020, I think Cardano is in a really, really, really good position going forward into 2021. Now, let's just say hypothetically that Shelley is delayed until later this summer for a bug or for some stability issues. Is that the end of the world? Should we abandon Cardano? No. It's not the end of the world, but it would be damaging to the credibility of IOHK and Charles Hoskinson after repeatedly missing deadlines. However, I personally don't see that happening based on where the testnets have been thus far in closed testing and just based on the fact that I know they've learned their lesson on this front. Now, we'll know more during the first week of public testing, but I'm really stoked to get started using this Cardano testnet public version of Shelley. Now, I wanted to take a quick minute to shout out a company that I've really been digging lately, and keeping with the coffee theme of this series, that's what this company is all about. The company is called Bottomless, and they work with local roasters to get the best coffee for their customers on a subscription basis. But there's a really cool feature that they offer that I've been looking for forever. They enable the subscription to automatically order new coffee when you're running low, so you don't have those days where you're ready for that cup of coffee and you just don't have enough in the pot for a cup. Essentially, you set up an account, you pick some coffee or a rotation of coffee you like, and they send you a digital scale, which I have right here. They send you this digital scale you put on your counter, and whenever you're done making coffee, you put your coffee bag or your jar on the scale, and it tracks your consumption pattern to learn when to order you more coffee. You don't have to use the bag either. Of course, I have my little jar here. It's like an airtight jar, and you can zero the scale to that as well. For example, I drink a ton of coffee. So when my jar hits like about a third full, they send me an email letting me know an order is coming so that I can get it within 3 or 5 days when I'm about to run out. I am obsessed with this service because so often I have a subscription set up that just doesn't accommodate my needs. I either have too little coffee or way too much, and at least this one I know it really tracks based on what I'm drinking. So I reached out to them so we could collaborate, and they're hosting a page for me that shows all my favorite coffees that I'm drinking these days. So if you want to grab a bag from them and drink along with me on these weekly shows, Crypto Over Coffee, you can do so using the link down in the description below. Bottomless is a relatively new company, and I really believe in their product. I believe in their mission, and I love it if you could show them some love and get your next coffee reload through them. Again, I'll leave the link down below for that. And thanks so much in advance. We can go back to the crypto world now. In the world of Ethereum, you may have read about congestion on the network, driving fees upwards and causing slowdowns with the continued growth of DeFi apps and other high-volume dApps on the network. This activity has drawn calls from notable developers and organizations in the Ethereum community to once again increase the gas limit within one block of transactions on the Ethereum network to quell the concerns about network congestion. Essentially, gas is a fee measure of computational cost for a given transaction or action on the network. Remember that miners have to be paid for validation of blocks of transactions, and that includes the complicated transactional operations performed by smart contracts. So gas is used to pay these fees. And also note that each node of the network must process the operation to validate the miner's work. So when you execute a function on a smart contract, it's not just you or the miner executing that, it's everyone on the network. Now, this is what makes Ethereum a world computer, because it's a network of a bunch of nodes on a network agreeing on the deterministic output of a series of transactions. Boom, that's blockchain. Now, the calls to increase the gas limit per block basically are equitable to the increase in block size in Bitcoin that people call for. The larger the gas limit, the more transactions can be executed within one consensus cycle. This means that an increase from the current 10 million gas per block to 12 or 15 million gas per block is being proposed now. And this is after already moving from 8 million gas to 10 million gas where we are today. And that change only happened in like September of 2019. Of course, this is not a simple nor uncontroversial idea, because increasing block gas limits also have consequences in terms of network security, stability, and decentralization. Now, if you increase the gas limit per block too much, then you can potentially make weaker nodes with less computing power in the network unable to process transactions fast enough to keep up with the network. So you're essentially pushing these weaker, less hardware-capable nodes off the network. You can also open up new attack vectors that take advantage of computationally intensive but gas-cheap operations on the network, effectively stonewalling weaker and less capable nodes from even participating at all. Now, this debate is much like the block size debate in Bitcoin. It's not as simple as just flipping a switch, changing one parameter, and then scaling. There are consequences to raising block gas limits as well as raising block sizes when you're trying to scale. Now, in my opinion, they should raise the block gas limit by 1 million gas from 10 to 11, and then they should retool the gas costs for different operations to tailor the network better towards secure but cost-effective transactions, especially for ththose like ERC20 and ERC677. This whole process is intricate and it requires extreme care because gas is arguably one of the biggest attack vectors in Ethereum today, and it's caused a lot of problems in the past when they retool the rules and they open up a vulnerability in dApps. So I'll be watching this closely and keeping you informed, but just something to be aware of. Now, if you've watched my channel for any length of time, and thank you to those of you who have, I really do appreciate it, you'll know that I've been a huge fan of Brave browser for years, and I've done quite a bit of content about it on the channel. And if you've not yet downloaded it, I can't tell you enough. You should download it and give it a try, and I'll leave that link down below. But that being said, Brave has achieved some really significant milestones this past couple months. In April and May, Brave grew over 1.5 million active users and broke into the 15 million monthly active users mark, and actually nearly 5 million daily active users these days. For a browser that has such a short history, it's so new, and it's in such a niche position, that's phenomenal. Those growth numbers are really promising. Now, I think the growth is in part due to the increased focus on privacy online, which Brave offers in contrast to Google's popular Chrome browser. Brave offers ad blocking, tracker blocking, and privacy-focused features out of the box without sacrificing on user experience. Of course, it's not perfect. It remains a work in progress. There are things that I'm very critical of, like the absentee sync features, but it remains my go-to daily browser for good reason. It's fast, it's private, and it has the same UI feel of Chrome, which is something I actually do like. Now, the browser is getting attention, and deservedly so, notably recently by Joe Rogan, the host of the popular podcast with over 150 million, actually close to 200 million monthly downloads. He just said on air that he uses Brave himself. I mean, this type of notoriety is a great sign for Brave, and it shows that there's an increasing number of users coming into play for this browser. It's just awesome to see. And a bonus benefit here, actually, there are over 1,000 advertisers now on Brave that I've seen nowadays a huge uptick in the number of ads that I'm getting on my Mac, especially here in the US. So that means I'm earning more basic attention token. In other news, you all know that I am continuously harping on cybersecurity and how to best protect yourself online. But more and more examples keep cropping up illustrating how important it really is. We as individuals need to demand more effort and investment from organizations that we trust with our data to protect and safeguard our information like it's their own. I can't stress it enough. I mean, just recently, 3 universities, Michigan State, University of California, San Francisco, and Columbia College of Chicago, were all breached with ransomware, claiming to have seriously sensitive information taken about students at these institutions. This is a continuing trend these days as more and more universities and educational institutions are being targeted by hackers for personal info. It's clear and so obvious that the cybersecurity posture at major universities, businesses, and even governments are not nearly adequate, and we have to change it, and we have to change it fast. The world is so dependent on technology. These organizations gladly take our money, but our information is basically up for grabs. I mean, it just blows my mind the way that we go about these things. This is one way that the crypto community, though, can help the world. We need to promote zero-knowledge security models, encryption, decentralized architectures, and other solutions that can help our world get better and smarter with data security, at least to just take it seriously. Now, I really am desperate to see change in this regard. It drives me crazy, and it has gotten so out of hand. It's like a new hack every day. Ugh, it's crazy, honestly. Speaking of crazy though, ladies and gentlemen, it's time for 404 Logic Not Found. And for those who are as of yet uninitiated in this little firecracker of a segment, I basically highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. Speaking of attention, if you want to help this video get some attention, just hit that like button on my behalf. Really quick, hit that like button. Thank you in advance. Now, last week I had to take some time off due to upgrades to my studio that are still ongoing and as of yet not done. So this story is from last week, but I think it needs to be discussed in this segment anyway. Now, you may have heard the drama about Goldman Sachs' investor call that basically dismissed Bitcoin, claiming that it's not an asset class. They backed up this argument by saying that it's too volatile and it lacks consistent cash flow opportunities for clients, and as such it can't be qualified as an asset class. And these arguments are extremely puzzling, not only because Bitcoin and other cryptocurrencies for that matter have indeed earned plenty of cash flow throughout their history, but because Goldman Sachs clearly did not put in even a fraction of the research required to make these types of statements to their customers. This is evidenced by the fact that they claim Bitcoin is not scarce because Bitcoin Cash and Bitcoin Satoshi's vision copied the network in a fork and created their own Bitcoin. This is yet another embarrassing conflation of a fork creating new Bitcoins, when in reality, this is an example of new assets completely being created that stand alone. It's not new Bitcoins being copied and created. Now, I guess Goldman Sachs is really just used to a centrally controlled financial system where only a select few get to print money with impunity. I don't know. Overall, it's a really disappointing and discouraging sign to see an organization with such brilliant people making such closed-minded and poorly researched statements. I know that there are people who understand and support Bitcoin and crypto there at Goldman Sachs, but clearly not the ones who are leading that call. 404, logic not found. Now, one story that I'm particularly stoked to share with you, moving away from the bad stuff, is the recent nomination of crypto-friendly SEC Chair Hester Peirce to another term lasting until 2025. If approved by the Senate, Ms. Peirce will be an important ally for the cryptocurrency world within one of the most important and influential regulatory bodies in the US for another 5 years. And this is huge news. As the cryptocurrency industry continues to grow and mature, it will be even more important for there to be allies both in regulatory and legislative positions inside the US government, as well as abroad, to be honest, to ensure that regulation does not stymie growth and adoption whilst also keeping investors and users safe. Now, I had the pleasure of speaking with Hester at a conference recently before the whole world shut down, and I'm really excited about her ideas and approach towards innovative technologies like blockchain, cryptocurrency, and even more outside of that in terms of their regulatory approach. She's a great ally for the space, and that's why this is such great news. I hope the Senate approves. In terms of Bitcoin, as promised, here's some interesting stuff in regards to good old BTC. Let's sprinkle this on the Crypto Over Coffee episode. This past couple weeks, we've seen it all. We broke over 10K, then we dropped down like $800 down to like $9,000 in like a matter of minutes. And then we went back up. It's been a real roller coaster ride. But what's more interesting is the results after the halving and what we're seeing these days. The mining difficulty in Bitcoin dropped about 9%, maybe more, in response to the inevitable miner capitulation that resulted from the halving's lower block reward, which means that we're currently at like December 2019 or January 2020 levels of Bitcoin difficulty. And that's the difficulty of achieving proof of work or finding that value within a certain window in terms of hashes on the network. Now, at face value, you might think this is bad news, but in reality, it's proving out a common theme in the halvings of past, and that is that the network is re-cementing mining stability after the halving. It's like a reset, a hard reset for Bitcoin. The difficulty adjustment that we just saw should hopefully stabilize the miners that are still on the network, and then we can start to see more hash rate and subsequent difficulty increases from that new baseline. Now, these trends seem to follow the expected outcomes from the halving that we've seen in the past and that we talked about on previous episodes here. But from here, I'd expect plenty of volatility, up and down roller coaster ride markets. I'm just saying that's what I think. Now, there is good news here because after India recently relaxed regulations around cryptocurrency in the country, a whole new influx of Indian investors have started to flow into the markets. One service, Paxful, has seen a 28% increase in signups month over month recently, which is likely a result of these new investors coming into the mix. And as new regulations continue to come in and old regulations continue to loosen, more and more exchanges will become active in India. And I would expect this to become very consequential in terms of prices, not only for Bitcoin, but for crypto at large. We're talking about billions of people with the propensity to use and invest in the industry and in cryptocurrencies overall. This is something that people need to be thinking about as we go into the remainder of 2020. It could be a major factor. And of course, if you want to keep the party going, you should check out the second half of my top 10 altcoin picks in the video linked up on the screen here. But otherwise, if you don't have time to stick around, I hope you and your family have a fantastic weekend and week to follow. Thanks so much for watching, and until next time, cheers.